Rob.
Hi, Dominic.
How are you?
I'm outstanding. Thank you. How are you today?
I'm good. Thanks so much for making the time to join us here today.
Well, thank you for the invitation. It's a pleasure to be here.
Excellent. Well, I love talking about money. Money's cold, but talking about money.
Yeah, it doesn't necessarily make the world go round, but it does pay for the ride.
We got a money guy. We're going to get money guy humor on today's call. Well, that's great. Thanks for joining us. So this, as you know, is a podcast for cabinet makers and people in the manufacturing industry. Interestingly, we have people who aren't cabinet makers listening as well, but they're generally in trades and always business owners. But before I start, Rob, how do you come to be, how does a guy like you get invited to a podcast like this? What's your background?
Great question. I spent 40 years in the trades. My dad was a builder, so I started sweeping floors and straightening nails when I was 9 years old. Learned that 8s go in one box, 16s in another, and never stood around. Always had a broom in my hand if there wasn't anything else to do. My dad made sure of that. So I was a smart aleck, 14, 15-year-old. Told my dad I knew how to do everything, and I was going to do those basement stairs, and he let me do it, and wasn't all that mad when he had to tear them out because he realized that I'd never screw them up again. So all through every phase of construction, from labor, journeyman carpenter, superintendent, foreman, project manager. Spent 40 years in that industry, residential, commercial. So saw and did just about everything up to 8 stories. Never high-rise work, other than in the units themselves, like with a remodel, but never actual construction of anything that large. Have a nice, moderate woodworking shop. It's not Norm's gosh darn Yankee workshop, but those are, you only see those on TV. And
I know, perfect, no dust, everything matching.
Yeah, 6 routers with 6 different bits for everything he wants to do.
Yeah. So you know this industry really well.
I have some history. Yeah, I was lucky, and my dad let me do it. Let me make the mistakes, let me learn, and I gathered a very high level of appreciation for the trades. It's something that's there. It's not the pyramids, but we still built it, and it's still standing, and it's something to be proud of that we've given.
Yeah. Well, you're a finance expert now.
Moved into the finance side in 2008. Met a gentleman at a short sale class, and we collaborated on some real estate deals. He went through a program to obtain business funding, and that's how we started the first company.
Oh, wow.
10 years ago.
Yeah. Well, today you're here to give us your experience with a little smattering of some construction background and Yankee workshop references wherever you can make them. But today I invited you here to talk to us about how unsecured business loans work. And, a lot of the people listening to this, as I've said, they're all business owners. They're all in different phases of growth. We've got lots of people who are in that earlier phase of growth. And I think some of the insights you've got, this is the right place for people to hear those things, because it's not the stress and the pressure of filling out an application and getting it back to you in 20 minutes. They've got a chance to think about it and learn about it. So what can you tell us about unsecured business loans in general? How does that whole thing work?
It is based on the business owner, partner, or even a third party brought into the company as a guarantor to co-sign for your company. The lenders will base their decisions on that guarantor's credit profile. And on the business loan side, they'll also include their income. So if they are a 1040 tax return W-2 employee, then the lenders will take your net personal income, which is line 43 on your tax returns. That's your net. And they will divide that by the total payments that are on your credit report. And that will determine your debt to income ratio for any type of loan, whether it's a business loan, a home equity line, The lenders that's going to be their key point, their foundation. I always say, I know a lot of standards will go up to 40%. I will typically say 35, because people need to remember that the lender is going to be calculating his new payment into your DTI or debt.
Right. Yeah.
So if you go in thinking 40%, okay, I'm below, well, and I start getting denied, why is that? Well, you've exceeded the lender's threshold. If you start below it and calculate in the lender's payments for the loan that they're going to be presenting to you,
right,
you have a better chance of meeting their requirements and their threshold and being below that.
Now it's called an unsecured line, but is it for us? Am I getting that financing for a specific thing, or is it just cash that I have to use as I need to? I could use it for marketing, I could use it for labor, or do I have to buy a machine?
No, great question. Because it's unsecured, the criteria can be a little more stringent. FICO score, debt to income ratio, balance to limit ratio, revolving usage. There's criteria involved, and it's more stringent than if for a HELOC. You know, if you have a property that's valued at 175 and your mortgage is only 30, the mortgage broker is going to be licking his chops.
Yeah, exactly. Yeah, that's a great deal.
With the unsecured, because it's based on your credit profile and your income level, the criteria is a little more stringent. But to answer your question, no industry or no restrictions at all. Whatever you use the funds for is your business.
That's great. You know, because there's a lot of people out there that are running a great shop. Maybe they're solo or they've got 2 or 3 people, but the owner keeps getting sucked back into production and needs that extra labor money so they can focus on sales and estimating and operations and all the things that actually goes into running a company instead of building the stairs at the bottom of the basement.
I deserve that.
Hey, listen, it happened to me too. I used to be a framer. And
okay.
I think that's speaking low of me and high of framers. I was not a great framer. And I installed an entire wall backwards by having the offset studs on the wrong. I was a bonehead kid. I probably wasn't listening or watching the marks on the plate, but whatever. I got it ripped out in front of me, and yeah, fun times. I still remember. I worked with a German crew. They were swearing at me in German. I don't even know German, and it hurt.
Well, it's only a mistake if you leave it.
Yeah, that's right. That's right. It got ripped out.
Nice.
Hey, you mentioned something called a FICO score. Now, I know what it is. You certainly know what it is. But so that we can just level set the playing field here, can you give us as a professional, what's a FICO score so everybody understands and it's just rock solid clear?
Sure. Fair Isaac Credit Organization. The bank set this up. I think it was in the early 70s. And along with the bureaus, TransUnion, Equifax, and Experian. And they are logarithms and data that the lenders use to formulate and calculate and come to a decision on an individual for a loan of any type, whether it's a mortgage, revolving, or installment. So that's basically it's data, and it's logarithms that are fed into a program, and it will provide a score for the person. The major components are going to be start with history, the length of time on your credit profile.
Right.
For instance, let's say you're 36 years old. You had your first instrument of any type was your car loan when you were 18, and 36 months later you paid that off. Well, now you're 36 years old, you have 18 years of history on your credit profile.
Right.
So that's how they determine that. Second component is the amount of credit that you have and the type, because I think I alluded to the 3 types, mortgage, installment, and revolving. Those 3 items will strengthen your profile. If you only have one and not the other 2, it's not necessarily detrimental, but it's not going to put you in the best position according to the banks. They want to see that you've had these items and service that debt properly, whether it was your 24 or 36-month auto loan, your Sears credit card, or Menards or Home Depot, whatever it may be. A lot of people start out with those store cards or a gas card.
Right.
Which is a good place to start. When you're 18 years old, they're available. They'll give them to you, and they will help build your profile. History, accounts, negatives. Negatives can be problematic, obviously, the big ones. BKs, bankruptcy, charge-offs, collections, 30, 60, 90 days late. Those are no-nos. Stay away from those if you can. And the fourth item are inquiries. Lenders do not, on the unsecured programs, lenders don't like to see that you've been aggressively seeking credit. So any more than 3 new accounts in the last 12 months or 4 inquiries within the last 12 months can lead to denials. Lenders don't like to see that you've been aggressively seeking credit.
It's funny that they would consider that to be aggressive. 4 inquiries in a year as being aggressive. That if you're a growing company and you're opening up an account for your wood supplier and your accessories supplier and your abrasives and adhesives, that's pretty tough. That's pretty tough because you're opening up accounts anyways. And if all of those are pinging your credit, you're going to get negatively viewed. You actually had, you and I, for those of you listening, Rob and I have spoken before. We set ourselves up for this call so that I was able to ask Rob a few questions and figure out what today's topic would be. And Rob, you mentioned something about servicing the debt. There was a kind of a neat couple of points you had that goes back to this whole taking care of getting approved and massaging your credit. Can you tell us a little bit about those 2 things?
Absolutely, especially with the small business owner and the credit lines that he obtains. It's beneficial, and really you're beating the bank at their own game sometimes if you can follow some of these guidelines. The great thing about the business credit, as a business owner, you sometimes need to max those out, and the lenders will look at that as part of being in business. It's good for business. They won't. It's not going to affect your business credit profile the same way it will affect your personal credit profile. A business line can be maxed out and not affect a business score at all. Whereas on a personal account, you reach 30% usage, the banks consider you maxed, and you've probably all seen your credit score go down, thinking, I've got a $10,000 limit, I only hit $3,000 that I'm using, but 30% of the bank is maxed. So you're right. On the business side, there is no such, that's not detrimental to your business credit profile at all.
Wow.
Yeah, so to max your account out, if you're purchasing material for a new job, whether it's oak or maple or corian for the tops or marble or whatever, or granite, whatever it may be, you need to purchase that material, but you also need to service that debt. The best thing to do is to never make a minimum payment and to never pay on time. Never make a minimum payment and never pay on time. Most people don't realize that the banks are still working on the 13-month lunar calendar. There are 28 days in a bank's month. And when your payment is due and their cycle is complete, it's only 28 days. So keep that in mind. So when your payment is due on this date and you think, I'm not going to mail it till here. Well, no, do not do that. Make sure they get their payments early. And if you're going to, make sure you get your payments early, and don't think 30, 31 days in a month, think 28 days in a month. And also that balance, that payment amount, banks want you to make a minimum payment because they get to charge interest on that maxed out account. Well, you don't want to carry that. Carrying it for a while is okay until your receivable comes in or until you have a closing and you get a lump sum so you can pay that off. So while you carry that balance, make sure you pay early, and then make sure you make 2 minimum monthly payments within that 28-day cycle.
Oh, really? 2 payments? And do they recognize that if you're a fast payer, do they have an algorithm that also gives you credit for that?
Oh, absolutely. Yeah.
Okay.
That will put you in good standing. And as soon as you do get that receivable, the invoices got paid, your accounts are full, you had a closing on a property, whatever your business may be, as soon as you get that, pay them off completely. And that will keep you in good standing with the banks.
Yeah.
So when your term is done on your loan, whether it was 24, 36, or 48 months, or you've got a business card or a business account, a revolving account, call up your lender and request a limit. No different than you would ask the lender to renew the terms on your loan. A lot of times with the corporate startup accounts, within 90 to 120 days, if you've serviced that debt properly, lenders, they could considerably double the limit that you were originally approved for.
So all it takes is be diligent. And for a lot of us starting out, it's tough because cash flow is everything. But we have to remember, taking care of the bank, taking care of the money is the key to the future, right? But you're saying take it that other step further is once I've paid it off, call the bank or the lender and say, listen, I paid it off. Let's have a look at my credit again, because
absolutely, yeah. With
limited doing bigger jobs because you can't float the credit for the product or the labor.
And they'll look back and see, okay, he had these accounts were maxed out for for 30, 60, 90 days. He had them maxed out, but he paid us early. Oh, and he paid us off completely. And he did that 2-3 times in a row. So he's servicing the debt properly. We're going to increase his limit because he did that. Or we're going to renew his term loan because he's a good customer. He's got the work he's servicing the debt properly.
And the opposite is true as well. If they look back and say, what, you burned us once, you're not going to burn us again, go to another bank, that becomes this ongoing circle. That goes back to something that we talk about here a lot on this channel, which is keeping on top of our accounts receivable. Because we don't want to be a bank. It doesn't matter what, if we're doing kitchen cabinets or commercial work. I'm not a bank. I'm a mill worker. I'm a cabinet maker, not a banker. And so I need to make sure I'm getting paid for the work I do, because I've got to pay my people, got to pay for my rent, my overhead. I've got to feed my family. It's fair for a business owner to say, I have to pay myself too.
Right.
So my family's whole. It's fair to say that. So
absolutely.
Yeah, some good stuff. So never pay on time and never make a minimum payment. But what you're saying is never pay on time. You're saying pay early.
Correct. Exactly.
And never make a minimum payment. You're saying make a little bit more or do it twice.
If you can double that minimum payment, if you're only going to do it once, or if you can pay them twice within that 28-day period, or say, 2.5 times whatever that minimum payment is, make sure you do that. And then once you do get your receivable or your closing happens and you've got an influx of capital, pay them off completely.
What's the best thing to do and this is going to happen? So let me ask you the question now before anybody gets stressed out. I'm going to be late. I'm going to get paid by the general contractor on Friday, but it's Tuesday and my payment to the bank is due. What do I do in that case?
Let them know. There is the possibility that they could put you, and extend you a grace period. Not every one of them will do that. Some of them have protocol where as soon as the switch is flipped, the red flag goes up and that's it. Others will sometimes have that leeway to, he contacted us, he let us know, we're going to delay this. It all depends on the lender.
Yeah, and they have their own computer systems in the background where they'll say, Dominic called in, explain the situation. They do go back and look at those things. It's far better than absolute silence. Imagine if, Rob, if I owed you money and you knew you were going to see me at the soccer field on Tuesday, and suddenly I didn't show up. But I come on Friday, you're going to be like, hey, did you really miss practice on Tuesday, or were you just ducking? Right? It's a lot different if I shoot you a text message and tell you what's happening. And so just communicating and being an upstanding person,
yep,
it goes a ways. It's better to be, if you're going to make a mistake on the side of taking the high road.
Oh, absolutely. And you mentioned the banks and their system. They do use CRMs, just like a lot of small businesses and big businesses. And they do. Their representatives a lot of times will have notes. And when you call in and say, I spoke with so and so, he goes, oh, I see that. Yes, that was on the 11th. They do have notes in there. So it's you can't guarantee it, but you're always better off doing that. If you can communicate with the bank, yes, by all means.
Yeah, and I'm not trying to build a situation here where our listeners think they can be late. We don't. No. None of us want to be late. But if you're going to be late, there's two ways to handle that as well.
Yeah, good point.
I think I said this at the start. Money itself is cold, but talking about money gets hot.
Yeah,
right?
Absolutely.
So what's the smart thing for somebody to do if they're just going out and looking for financing? What's the smart way to go about it? You've been in this business for a long time. You also know the construction trades. Do I just go and ask everybody, or what do I do?
Determine what's going to be the best fit for you and your company. There's dealing in construction. So you've got a shop, you've got a warehouse, you've got material, you've got labor. What type of funding is going to be most useful? If it's a term loan, is it going to be there in place long enough? Are the 24, 36, 48 months, is that going to be useful, or are you going to need it for a longer period of time, or a lesser amount forever? So, determine that if they're the unsecured corporate cards, or if they're going to be more of a term loan program. Or the third option is your traditional full doc line of credit.
Right.
The bank may extend, and then you've got it there for as long as, again, the debt is serviced properly and the lender is being satisfied. But that third option obviously is something that a lot of businesses want to get, but it can be a little more difficult to obtain. Yeah. But it's a line that the bank extends to you. They've looked at your books. They know how much you're making. They know what your months have been like. They know what your gross revenues have been like over the last couple of years. And, they decided that, this is a good bet for you. And he's going to use it. He's going to use it wisely, put it that way.
Yeah.
So
spend it on the right thing.
Yeah, it all depends on what type of business you run, what industry you're in, and what you may fit your needs best at that time. And not just needs, but also how you will qualify, what you qualify for.
Perfect. Well, if somebody wants to learn more about this, Rob, how do we go about getting in touch with you and maybe having a private conversation about money?
I'm always happy to discuss that. And our website is www.nationalcorporatecredit.com. My email is rob@nationalcorporatecredit.com. And my phone number is 630-457-8123. If I'm not available, calls may rotate. Anyone on the floor can assist any potential client or answer any questions if that's all that needs that the person has.
Yeah. Well, it's good to know. I mean, thanks for taking the time to explain this to us, because what might seem simple to you, it's language you use every day, like FICO scores and things like that. To people just starting out, a lot of people haven't grown up around a kitchen table where they talk business. And so they have to learn it from wherever they can. That's why they listen to podcasts like this and try to make connections where they can. And so thank you for taking the time.
I appreciate the opportunity. Thank you so much. And yeah, I mean, most small businesses fail because of a lack of working capital. And if, somebody can get directed in the right direction to help them and to start up and grow, then we've accomplished a task.
Perfect. Well, thanks so much, Rob. Everybody, thank you for listening, and get in touch with Rob if you have more questions.
Thank you, Dominic. I appreciate it. You have a great day.
You too. Bye-bye.
Bye.